Are you looking for some passive income in this coming up year? Well, today I'm going over 3 high dividend yield stocks. Each of these companies have a history of paying and growing their dividend year over year. 2 of these companies are considered dividend aristocrats, meaning that they have consistently increased their dividend over the last 25 years. Now, although dividends aren't always guaranteed, these are well-established companies that will be great additions to any long-term dividend portfolio. If you're ready, let's jump in. Eddie V here, sharing stocks to help you on your investing journey. The first stock on our list has a market cap of $39.8 billion and it is in the real estate sector. This company is Realty Income, ticker symbol O, and is also known as the monthly dividend company. Now, it is a REIT and it is dedicated to its shareholders by providing them with dependable monthly income. And it can do that by its fantastic cash flow of more than 6,500 companies that are owned through long-term lease agreements. And these companies are found throughout the 49 states and Puerto Rico. And just to get a taste of what companies are owned by Realty Income, take a look at this page right over here showing the top 20 clients. You can see from Dollar General, the Walgreens, to BJ's, Red Lobster, and also Kroger. So feel free to pause the video and take a look at these. Realty Income has fallen 9.5% since the start of the year, and within this last month it has grown 1.37%, bringing them to a current share price of $64.45. It's just below its midpoint of its 52-week range with a low of $55 and a high of $76. It is trading at a price to funds from operation of 16.08 with a nice dividend yield of 4.62%, giving you an annual payout of $2.98. And it's been growing that dividend for the last 5 years at a rate of 3.92%. And like I mentioned at the beginning, it is considered a dividend aristocrat, growing its dividend for the last 25 years. Wall Street analysts are considering Realty Income as a buy right now with an average price target of $69.94, giving you about an 8.5% upside to its current share price. Over here looking at some technical analysis, you can see here that within the last week, Realty Income has been in a nice positive trend with a lot of buying volume right here. So it has passed through its 25-day moving average, this purple line, and moving into its 100-day moving average, which is this green line. It was in a negative trend starting in late November, as you can see right here, and right now it's turning up into a positive trend. So if it can continue this nice buying volume right now, it'll be able to break right through its 100-day moving average. And one thing to notice that it is at a support level around the $65 range. So it will need a lot of buying volume to push it through that 100-day moving average, because it looks right here, it's been hovering around that 65 and starting to fall. So definitely want to keep an eye on it, but we do have a good trend moving upwards if this buying volume continues. Over on its income statement, first looking at its revenue, you can see here that the revenue has nicely increased year over year and almost doubled since its last year. So that's a great sign for Realty Income. Scrolling down here to its net income, we can see here that just like its revenue, it has continued to grow year over year. So another great thing to see for Realty Income. Scrolling down here, and you can see here that they have been growing their shares outstanding, which is nothing to be alarmed about. Since Realty Income is a REIT, as it grows its portfolio of real estate, it will be growing its shares outstanding. So that's a good sign to see that Realty Income is growing. One other thing to look at is that they have been growing their dividend year over year very nicely, as we see right here. Now looking at its free cash flow, over here you can see that they have been growing very nicely year over year, and this year almost doubled what they had last year, which is good to see in relationship to its revenue and its net income. So they have a 5-year average of $1.32 billion, and that's very nice to see for Realty Income. Next stock on the list has a market cap of $35.95 billion, and it is in the consumer staples sector. This stock is Walgreens Boots Alliance, ticker symbol WBA. And Walgreens is a leading retail pharmacy throughout the United States and internationally, and they have over 13,000 stores worldwide. And these stores are located in high traffic areas, and just within the United States, about 80% of the population is within 5 miles of a Walgreens store. Over the last year, Walgreens has fallen about 24%, and within this last month, it has grown 7%, bringing them to a current share price of $40.43. Now they are towards the low end of their 52-week range with a low of $30 and a high of $55. Now they are on the low side of their 52-week range with a low of $30 and a high of $55. They're trading at a nice PE of 8.99 and have a dividend yield of 4.75%, giving you an annual payout of $1.92. You can see here that they have been growing their dividend at a rate of 4.32% over the last 5 years, and they have consistently grown their dividend for the last 30 years, being the second dividend aristocrat on our list today. And one good thing to notice is that their payout ratio is around 38%, so they do have plenty of room to grow their dividend in the coming years. Wall Street analysts are considering this stock as a hold right now, with an average price target of $42, which will give you about a 4% upside to the current share price. Looking here, Walgreens has been over its 200-day moving average, which is this white line right here, and been in the overbought section for a while now. Now, looking right here, it is starting to turn into a negative trend. So if this selling volume continues, we could drop through its 200-day moving average and the 25-day moving average and going towards its last support level, which was around the $38 range. And if it does continue through all of its moving averages, the next support level is around the $35 range. So definitely want to keep an eye on it. But lately, it has been looking pretty good around this 200-day moving average, keeping pretty stable there. But definitely keep an eye on it. Over on its income statement, looking at its revenue, you can see here that last couple years, Walgreens has been around the same revenue level with a drop in 2019 and 2020, of course. However, they've been pretty stable, bouncing back from their $126 billion in 2020 and back to their previous average around that $132 billion. Scrolling down here to the net income, we can see here a nice increase of their net income over the last couple years, so bringing them to around the same average net income prior to 2020. So still have room to grow, but moving in the right direction. Scrolling down here to see their earnings per share, you can see here that their earnings per share has been growing, which is nice. So over the last year, they are starting to get back to their previous levels before 2020. Now looking at their shares outstanding, they are starting to slowly buy back shares, which is great to see, especially if their share price starts dropping back through those moving averages. It will be a great time for Walgreens to buy back those shares while the shares are at a discount. And as we saw, their dividend has been increasing year over year, which is great to see. Looking at its free cash flow, going back prior to 2019, they were around that $6 billion range. And since then, they've been hovering around that $4 billion range. Now, you do see there's a drop right here. Now, recently, Walgreens has been looking at buying a larger stake in the Village MD company. Now, from the articles I have read, Village MD is going to remain its own separate company. However, Walgreens does plan to insert Village MD within all of their stores by 2027. So they have a lot of money going into that to acquire a larger portion of that company. And with that, they have a 5-year average of $4.25 billion. So great to see right there. And they still have cash flow to pay those dividends and buy back shares if they choose to do so. Next stock on our list has a market cap of $155.8 billion and is in the communication service sector. This stock is Verizon, ticker symbol VZ, and it is in the wireless business company, which makes up about 80% of its revenue and operating income. Now, this company serves over 93 million postpaid and 23 million prepaid customers nationwide. Now, I do hold Verizon in addition to AT&T within my portfolios, and I'm a little more biased towards AT&T. However, as you'll see in a minute, Verizon is at a great discount right now, so too good to ignore, in addition to its great dividend yield. Now, over the last year, Verizon has fallen over 28.5%, and within this last month, it has fallen over 1%, bringing them to a current share price of $37.40. Now, Verizon is very close to its 52-week low of $34, and it is currently trading at a very nice PE of 7.2. They have a very nice high dividend yield of 6.98%, giving you an annual payout of $2.61. Now, Verizon has grown their dividend at a rate of 2.07% over the last 5 years, and they have been consistently paying that dividend over the last 18 years. And you can see here, looking at their payout ratio, it's underneath 50%, which is great. So Verizon has plenty of room to continue growing that dividend. Now, currently, Wall Street analysts are considering Verizon as a hold right now with the average share price of $46, and that's about a 24% upside to its current share price. So while the price is low, you can capitalize on its high dividend yield that it's paying out. Now, over the last 2 months, Verizon has pretty much been moving sideways on its support level around this $37 range, as you can see right here, back in late October. So it's been moving pretty much on its 25-day and 50-day moving averages, which is the purple and yellow line respectively. And right now, it did start the last couple weeks moving into this downward trend. So if it does continue moving downward with this selling volume, it could possibly move to its next support level, which is around this $35 range. So not too much movement right now, but most likely continue moving in this sideways direction. So it is at a discount, as I did mention, so a good time to buy it if you're looking for that high dividend yield. Over on its income statement, looking at its revenue, right here you can see, just looking at the last couple years, Verizon has slightly been increasing its revenue year over year, kind of bouncing around this low $130 billion range, and currently at its $135 billion range. So it is still moving upwards, which is a good sign. But this is a very large company, so the revenue movement isn't going to be as drastic as some other growth companies. Scroll down here to its net income. You can see here that the last 2 years, it has started rebounding from its lower levels in 2020 and 2019. You may notice this $32 billion. So over the years, Verizon has acquired different companies. The most recent one is TracFone, which it completed last year. So it does make a lot of acquisitions. Now looking at its earnings per share, over here, the earnings per share hasn't moved drastically. It's been around that $4, $5 range. It is increasing from its 2019-2020, but not any drastic change moving forward so far. Now, one thing to notice is with the shares outstanding, it has increased its shares this last year, most likely due to the acquisitions of TracFone, but definitely want to look more into it. However, prior than that, it's pretty much kept its same shares over the last so many years at that $4.14 billion. Now, as far as dividends increasing, you can see that they have nicely increased their dividend year over year, which is great to see. Now, if you're looking at its free cash flow, the first thing you may notice is this negative free cash flow last year, and that's around the time that Verizon completed their acquisition of TracFone. So a lot of that probably went to there, and they are starting to bounce back and rebuild their free cash flow to pay those dividends and buy back shares and everything. So with that, their 5-year average is $7.9 billion. So continue keeping an eye on Verizon and considering adding it to your portfolio when it's selling at a discount right now. If you enjoyed this content so far, do me a favor and smash the like button. It helps grow the channel and also spreads the video to more investors such as yourself. Comment down below what your thoughts are about these 3 companies. And just remember, I'm not a financial advisor, so definitely do your own research before investing in these companies. If you'd like to see more stock analysis, definitely check out this latest video right over here of great stocks to buy within this holiday season. And I'll catch you over there. Happy holidays. Peace.